All right, everybody, this is John. Welcome to the premium video, and it is Friday. Happy weekend. Let's take a look at the price action, and then I want to look at kind of money flow, where the strongest sectors are right now, and of course where the weakest sectors are right now, and all that kind of fun stuff. So over on the left, I've got a 5-minute chart with the multi-squeezes, so I can kind of see which time frames have squeezes. And then overlaid on this, if you look at these lines, these are the daily quant levels on a 5-minute chart. So if you look at this, this is H1, that's the center line, and then this is L1. L, of course, is the first low, and then H is the first high. And just kind of watching, essentially I've been talking about this week is just the idea that kind of where do the machines take notice and where do they step in? And you can see, today when we got down close to L1, there's buyers, you get back up here, sellers, and these are all machines, right? It's not humans looking at this. And then on the right-hand side, I've got a daily chart, and you'll see two sets of levels. These are larger term levels. This narrow one is the weekly levels, and you can see that basically this week we stayed right in between L1 and H1, high one, and L1 all week, and really just kind of a tight range all week, and then we fell almost exactly to L1, and then we rallied from there. So that's, again, this is the kind of the game of what the machines are doing and stuff like that too. And so in addition to the stuff that's happening on these lower time frames, and then the other thing with these levels too, we just want to keep in mind is that there are bigger picture levels here. These are the quarterly levels. So I'm looking at a weekly chart here on Amazon, and then the quarterly levels, right? So what's interesting about this, and again, remember, these are just the levels where the machines come into play. So if you look at that, and these levels don't change, they're here, all quarter. And you can see where Amazon came up to H1, and then kind of, over the course of a couple of weeks, went back down to the opening price, and then we worked our way back up to H1, and then it just held there until the quarter was over. And then it was able to reassess and then kind of move higher from there. And then you can see when it came down, L1 held to a penny, right? So what I like about these and look at right here. What I like about these quarterly levels, these are freaking invisible to everybody else if you don't know that they're here. And then it's just like these weird, like, oh my God, why did it reverse here, right? And then more recently, we went from, here at like 3,700 or whatever this was, all the way down to here. Okay, and this course, this was at that L2 level, and we found support there. And very likely how this works is that if you don't, on a quarterly level, you just really stay stuck in these ranges. And so there's a couple of things I like about these bigger picture levels. Is that one, you can set up butterflies because these are really far away from current price, so they're super cheap. So you're risking 1 to make potentially 40. And then the other thing is, and this is actually really important too, is just the idea that when it pushes through it, the odds of it closing below it are actually only about 4%. And this is just the open interest. So the only time I've seen this is after the March 2020 rally, the decline, and then the subsequent rally. But every time else, and let me get rid of this real quick. So if you've ever seen that before in your chart, you just got to get rid of show open interest, and then it's good. So the only times I've seen this actually stay below it is the extremes. You got March 2020, right? But notice that by the end, it put through it. But notice that by the end of the quarter, it actually was back up. So remember, there's only about a 4% chance it'll probe, but it'll close below. And then here, the rally was so strong it actually closed above it, right? But here you can see it's poked its head above and came back down and closed right at it. Closed right at it, right? Stopped here cold, 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 stopped here cold. The high was there, right? So notice that right now we're below it. And so, of course, the end of the quarter is coming up in about 3.5 some odd weeks. I fully expect that we will be back in this zone by the time this is over based on these statistics. But then after that, we'll end up with this huge head and shoulders topping pattern. And then, I do think we can go down from there. But anyway, those are the quarterly levels, and it's important to keep those in mind as well. And then on these levels, what we're looking at is, this is the NASDAQ futures, right? So Well, let's look at SPX. SPX is something that I like to watch quite a lot because there's a lot of hedging activity in this as well, and that also drives the machines. So first, let's look at the quarterly levels on SPX, kind of where we are right now. This price level is just one I drew. That's arbitrary. So let me get that. 4,600 is kind of that nice round number. So if we zoom in here, kind of the same thing. We already looked at the Qs, so no need to look at all this. But if we look at kind of where we are right now, the Qs, of course, the S&Ps are stronger than the Qs. Why? Because the S&Ps have some of the industries right now that are doing the best: aerospace, defense, commodities, energy. Those are all a lot of those are S&P based companies. So while the Nasdaq is down here, it's holding. But look where it stopped dead in its tracks. Okay, twice. So the same thing here is I don't expect it to close below this by the end of the quarter. But potentially what would make sense is we actually work our way back up here by the end of the quarter. So whether you can look at this on stocks or whatever you want to look at. Tesla here, we're just kind of hanging out. While we plunge below this, we're just kind of hanging out at this 821 level is kind of that quarterly zone. And you can see here when it pushed up above it, it actually needed to work its way back down. So just huge levels to be aware of. All right, so on this 5-minute chart, these are the daily levels. And these daily levels, and you can see these daily levels are essentially important because they literally show you the support levels for the particular day that you're trading. Again, let's look at SPX here. And then on, so that's, this is the daily level. So today we fell. We came right into L1, came back up, and there we go. And then on this daily chart, we've got the weekly levels. Okay, so this is for the week. And then we have the monthly levels. So let's zoom in on this a little bit, and you can just kind of see, like for the week on SPX, you can see that the high was right here, almost to the penny. The low was here, almost to the penny, and then today when we got down here, we actually was able to find footing here. So what I found is that when we don't have these levels, essentially we're trading blind because this is where the machines are. The machines are trained. AI is trained to scan thousands of charts on different time frames simultaneously. So it can sit there and be alerted immediately when price gets to something like this, and then it has to take action. And while the S&Ps, of course, and the Nasdaq respond very, very well to this, we're also seeing it with individual stocks as well. So a good example of this is DWAC. DWAC was one we did earlier, and on this particular one, these are the daily ones here. So we got in here on a squeeze, and then when we gapped up, we took profits here. And it wasn't because it was a fib extension or anything like that. It's just that, well, we're up here, if we're going up to L1, or in this case H1, that's where the machines are going to step in and start selling, so let's get out. And so it's just things like that that I'm finding that are very helpful in this market. And and if you're looking at things like bonds, right, it's same idea. Whatever asset class that you like to look at, the machines are dominating at certain levels, and to the extent that we're unaware of these levels is the extent we get railroaded. 2-point move today in the bonds, right? And you can see for for this week, so here this is the monthly levels for February, right? And you can see we just kind of came down, zoned out here, worked our way back up, and then for this monthly levels here, you can see that we are stopping dead in its tracks here, twice. So it's just things like that we just want to be aware of. So that all being said, we also want to kind of keep in mind what kind of what are the strong stocks right now. And because if we're going to short something, we're just going to short the indexes. But frankly, right now, the indexes right now are, there's a lot of short. Everybody's short right now. So I'm a little wary about the short side, but I'm not too enamored of the long side here. I don't want to catch a falling knife. So where are the strong longs? So not surprisingly, energy, ag, chemicals, all those stocks, of course, are doing really great. And you're seeing positive order flow. For the quarterly levels here on MATX, we are not quite there. So 116.16 is that quarterly high. I anticipate that we're going to test it, so could certainly buy pullbacks on that one. And then if we look here at CPE, petroleum company, big squeeze here. We're just kind of hanging out, and look at this monthly level right up here at 73. We're at 60 right now, so plenty of room to the upside on that stock. So what's interesting about these, and I guess I can back up here a little bit, where I found out about these is that I am an investor in a company that is a 100% AI driven, and this is their computer. So it's a $14 million computer, and it's off of a laptop, and that's it. There's 5 HVAC machines in there, and they got the floor here is removed, and it's 5 feet down. Otherwise, this place would burn up. But it's 100% AI based, and so what they do is they're really good at levels, and they can just they can see the machines can check all this stuff, and so on something like this, like on Tesla, so this is superior to say expected move or average true range, because if you have that, if the expected move is $30, then it's going to be okay, $30 range to the upside and a $30 range to the downside. But what this does, and it's AI, the AI based kind of stuff like this, is they actually don't want to look at average true range. They don't want to look at the Greeks. They want to look at what actually has happened. What is the actual personality of the stock? And you can see for Tesla, it's going to afford more room to the upside because of the upside volatility in the stock than the downside. So the upside move here, where they're going to take action, is higher than the downside. So what's great about this is, like, if you're doing an iron condor, you sell outside of this zone, so you'd have a call side that's higher, maybe twice as high, and then the put side would be a little bit lower, with the idea, because this is where the machines are going to step in and kind of help you out, so to speak, and kind of defend that level. And then for something like the S&Ps, it's the opposite. Based on this, the down moves are typically larger. So if you're going to do like an iron condor here, then you want to structure it so that the downside options are a little bit wider than the upside, and you can see that's where the machines step in, boom, and then they drive it back up. So it's stuff like that that I think it's pretty fascinating. It works great with squeezes. I know earlier this year I was doing a trade in Tesla, and I had done a squeeze, and it was a trade that I liked, and I've done it many times before. And then I was just kind of wondering, like, well, why didn't this one work? And so here's Tesla at a 2-hour squeeze. I'm like, all right, I'm gonna buy it. Let's go. And then it immediately falls. And I was just kind of like, oh, well, that's odd. What happened? Well, what I didn't know at the time, but now genius in hindsight, is this was where the H2 level was. And stocks they can sometimes edge above it, but it's rare, but they only close above H2 levels 4% of the time. So had I known this, I would have said that that would have been a great filter. That's a trade that I lost money on, and had I known this, I wouldn't have taken it, right? Or potentially would have just waited for this to run out of energy and shorted it. So it's stuff like that this is kind of the new normal in this market. Where this did work is, once I figured that out, this is my first $1 million trade of the year in the SPX, where we came down into well, that's Apple, so that's not the one. There, we came down into L2 here and started to bounce, and so I bought the SPX thinking I might get 20 or 30 points. It ended up being like a 100-point move. So obviously that was fantastic. And that turned into a great trade. So anyway, that's the kind of stuff that I've just been kind of really dialed into in these markets. So I am going to do a class on this weekend, actually. If you're getting this and it's Sunday, you can still sign up and get the recording, but I'm doing this on Saturday, March 5th at 12 noon Central. So I'm recording this on Friday night. So 12 noon Central. Central Standard Time. And so for, I think, a pretty reasonable investment of $597, we're going to work together and do the strategy class, using these tools, using them in conjunction with some of the things I like, such as the squeeze and stuff like that. But along the same lines is setting up a trading plan that's just based on that consistency factor of, right, how do we grind this out in this environment? And there's specific plans and specific things that we can do with that, and that's what we'll cover on Saturday. But more importantly, you actually get a copy of the tool, which we have for TOS and TradingView. Now, if you use E-Trade, well, what a lot of times what people do, they just open up a TOS account because it's free. They don't charge for data or anything like that. You put in $100 and you can have your chart, and then you can trade it wherever you want. And then if you want to do live trading, there's some additional things for that too. But you just go to simplertrading.com/wire. That'll take you to the sign up page. And then, of course, if you have any questions, you can call us. But anyway, this is going to be a great class. I really, when the markets change like this, I really like to get dialed in on, like, what can I do to make my life easier And this has answered that question 1,000 times over, so I'm super excited. All right, have a good one, and I'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.